Accacia, a decarbonization platform that focuses on the real estate and infrastructure sectors, has closed $6.5 million in its pre-Series A round led by Illuminate Financial, a specialist VC firm focused on enterprise fintech companies. Southeast Asia-based AC Ventures also participated in this round alongside early backers Accel and B Capital. To tell us how Accacia is helping the real estate sector step up decarbonization, joining me now is its founder and CEO, Annu Talreja. Also with me is Arundathi. Annu, welcome to Startup Street. Real estate and construction activity contribute to about, 40% of global greenhouse gas emissions. So first, tell us, how does your AI-enabled SaaS platform help real estate asset managers, owners and developers track their emissions? And then, of course, how do you design their decarbonization journey?
Hi, good to be here. So our platform is basically specially designed for real estate companies. Real estate has emissions across their value chain, and hence it's a very complex emissions tracking problem. Our platform automates data collection from different parts of real estate value chain. And with this automation of data collection, we have an algorithm specifically designed for all different sorts of asset classes within real estate, and can hence automate calculation of carbon emissions across the value chain.
Right. Hi, Annu. Arundathi here. What is Accacias Reach? What kind of projects have you managed so far? Give us a sense of your current business growth numbers.
Hi, Arundathi. So basically, we are a global player. We started our business in Asia, but we are now also working in North America. We have currently deployed a solution to over 25 million square feet of commercial real estate. That includes some of the top largest real estate asset managers globally, and includes all asset classes within real estate, including your typical commercial office, hospitality, data centers, logistics, all sorts of asset classes.
Okay. Annu, real estate is a hard-to-decarbonize sector given the complexity of value chain emissions, from construction, operations, and the variety of asset users. So give us a use case as to how you design custom decarbonized strategies and solutions for your clients.
So, for example, one of the major areas where emissions happen in real estate sector is construction activity, right? So at the time of construction, we recently worked with a client who is one of the largest business conglomerates in India. So with them, they were constructing a new building. So while constructing the new building, it also involved demolition of a previous structure. So this was a very unique situation where you can actually save a lot of emissions by recycling of materials and reusing materials. So we first kind of helped them devise a recycling and reuse plan of materials, followed by what kind of materials and procurement process should go into the any new materials that they have to adopt for this new building. Along with that, we also help them optimize the entire procurement process to minimize the emissions that would be generated during the construction process itself.
All right. And, coming to the investment, Accacia is backed by marquee investors, including Accel and B Capital. What does their backing mean to you, and how do you intend to turn profitable? What's the revenue model at this current point?
So we are already EBITDA positive. We are a typical SaaS company. We sell software and we make revenues out of software. It's a monthly subscription revenue. And, like with any enterprise software business, our margins are very, very high. But backing from leading players like Accel, B Capital, and now Illuminate and AC Ventures, I think gives us a lot of encouragement in terms of encouragement as well as the reach that we can have, right? So Illuminate, 4 of the 7 largest banks in the world are their LPs and are also their strategic partners, right? So this gives us unparalleled access to potential clients and potential trailblazers in the industry who could also be our clients.
Okay, speaking of encouragement, this funding comes at a crucial juncture as the Securities and Exchange Commission and Singapore Exchange have announced regulations on carbon emissions reporting, underscoring the urgent need for comprehensive and real-time climate risk data. Annu, how do you plan to tap into this huge potential? What are the growth and expansion targets that you've set for yourself?
Yeah, so Singapore is already a large market for us. About 60%, 70% of our revenue currently comes from Singapore. So we are already extensively working there. Apart from Singapore, we are also working in a couple of other Southeast Asian countries. So we plan to use this capital to expand our presence in Southeast Asia. Along with that, just last quarter of last year, we started with our first client in North America, in US. Now with the regulation coming in, those regulatory tailwinds are actually really supportive, and a lot of the capital that we have raised would essentially be focused on expanding in the North America market with the SEC regulation coming in.
All right, and if you could quickly tell us, Annu, before we let you go, you're an architect and urban planner by training. What has been the biggest challenge for you till date? And reports suggest that a staggering $18 trillion of investment is required over the next decade to get the real estate industry to net zero. So what more needs to be done?
A lot needs to be done. So $18 trillion is an estimate, but to get to that estimate, we first need to know where to spend. Unfortunately, this industry is at such a nascent stage that technologies where we could invest to decarbonize the sector, those technologies are in very early days right now. Most of them are not available for commercial use yet. So I think over next a few years, a lot of investment needs to go into innovative technologies that can help decarbonize real estate. And these goes from energy optimization, renewable energy, innovative green materials. All of these technologies, they all need a lot of investment. And especially when we talk of Asia-specific solutions for Asia-specific problems.
Absolutely.
A lot of investment needs to go in.
All right. On that note, Annu, we'll have to wrap up our conversation. But many thanks for joining us on Startup Street, and wish you the very best for all your growth plans.
Thank you for having me.